FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's time for Mickey Fulp's annual major market review. You don't find this done in very many places. In fact, you can find charts, but very few people talk about what happened in the year past. Mickey, you came up with this concept several years ago to do a retrospective each month and then a quarterly and an annual, and it's become a tradition with us. So to you, Mickey, and all of you out there, Happy New Year. Hope this is a great one.
Well, I hope it's better than 2015 because for investors, not a particularly good year. Dow down 2% over the year, S&P 500 down a little bit less than 1%. The year was really set by the performance in December, but markets vacillated all year long. The NASDAQ did quite well over the year, up 5.75%, very tech-driven, as we all know. But most of that gain was in the last couple of months of the year. Last quarter up 8%, so made a rally toward year end. The small caps, the Russell 2000, had a bad December, but a strong Q4. Despite that, small caps were down 5.75% over the year. That's not good because that's what really drives growth in the U.S. economy. And I dare say some of the onerous regulations from the Obama administration is very much hurting the small caps, not the least of which is Obamacare. The TSX and the TSX Venture, brutal second halves for both, very commodities driven. The TSX, especially oil driven, down 11% over the year, almost 11% over the half. Venture exchange, it focuses mainly on the beaten down mining sector. All-time low hit on December 15th, which is generally the yearly low driven by tax loss selling. It went below 500, that index, rallied the last couple of weeks, as it always does, and finished the year at 525, but down 24% over the year.
Yeah, bloodbath. Bloodbath.
Yeah, well, we'll get to commodities in a bit. Another brutal second half was in the emerging market indexes. Emerging market countries really took it in the shorts, down 18% on the index for the half, 17% over the year. I have great concern because my IRA is managed by a guy who's been preaching the rebound of emerging markets, and I may be moving some money, Kerry, here.
He should be investing in the VIX.
Well, yeah, the VIX was up a bit. It's been moderate lately. It finished the month at 18 and change. If we look at our 3-year history, that's probably about the average. And to remind everybody, the VIX basically measures the volatility of futures in the S&P 500.
Yeah, exactly. And you can play it on the up and you can play it on the down. And
as you can everything.
Yeah.
Kerry.
Well, of course.
That's what derivatives are.
It's a great derivative, though, because you know when that thing heats up, something is happening in the market. Yep. You might not know what, but you know that something is going to happen. And like you always say, we like volatility.
We absolutely do. We wish that thing would go up and stay around 25.
Hey,
we love volatility.
What about currencies? Now, obviously here, the Dixie, the dollar index, that is the story of the year, in my estimation, right?
Well, it's been the story over the last 2 years, up almost 13% U.S. dollar, and the second half of 2014. Let's start in the second half of 2014. Up 13%, almost 13% for the entire 2014. Up 9% over the year. Came off a bit this month. It briefly touched over 100 for a couple of days at the end of November. Fell off, ended the month at 98.7. But really, the story this year is the strength of the U.S. dollar. The euro was down 10% over the year. You know, that correlation, I've got to
Mirror
sit down
image.
and do that correlation and see how far back I go and get a plus 90% positive correlation, or plus 0.9, I should say, positive correlation for the dollar index in euro. I'm sure that's going to hold and hold and hold. We do that. We're increasingly into these correlation coefficients. We do it between the dollar and various commodities. I think we need to expand that in my research to the euro. Fed rate will finally, and not unexpected and very much baked into the market, was the quarter percent rise, 25 points in the interest rate. As a result, the 10-year bonds had some volatility mid-month, but that all settled back down, finished 2.09%, down 5% over the month, and 11% over the half, and about 4% over the year. But no one's excited about this. That Fed rate increase had been baked into all the markets. Quite surprising to me that gold did not react. The markets did not react for about a day and a half after that occurred. And then all hell broke loose. And here come the gamers. And they gamed it up and they gamed it down. And there was a lot of money made by the traders over those 2 days. I think that came down on a Wednesday afternoon, and Thursday, Friday, and the following Monday, there was a lot of money made and lost in the market.
Oh, yeah, that's for sure. No question about that. You know, the volatility this year, and, well, you look at the stock market as represented by the Dow, pretty much was flat, you know, less than 1%. But when you get to the currencies and bonds, you know, all over the place, and then you know, what we have next is really
indescribably all over the place.
Yeah, I mean, well, I'll let you talk about it, but it's breathtaking and it's volatility.
Right. Yeah, Bitcoin is breathtaking. Over the course of this year, Bitcoin opened the year about 320. It had lost 58% in 2014. As of the first half of the year, it had lost another 19%, ended June at 258. And since then, it's been up 67%. It ended the year at 430, which we have not seen that rate for Bitcoin since September of 2014.
Yeah.
Talk about volatility. It's on a roll. 82% on the quarter, 35% up over the year. But who knows where it's going? Who knows what makes it go up and go down? You know, I didn't have time to do any research on Bitcoin in preparation for this interview, but I know of nothing that's really happened in Bitcoin over the last few months. I haven't seen any real news on it. Maybe you can enlighten me. I know you talk to regularly with some Bitcoin aficionados. I tend to avoid most of those people.
You know, I don't know. Continued weakness in Europe, in the euro. I don't know. You know, it's difficult to know what drives Bitcoin. Fear definitely, and what else? I'm not
Market
sure.
Gamers.
Yeah, well, it's certainly subject to that.
Absolutely,
Certainly is.
I don't know. It's nothing that I would ever look at as a safe haven for my assets. Some people think it is.
Yeah, some do. And then we get to our beleaguered precious metals, and beleaguered is probably an understatement.
Yeah, the precious metals all hit 6-year lows over the last month. Gold Finished the year down 10% at 1062. It actually hit a low, I'm checking here, of 1050 in December. Silver has mucked about below $14. When did you think we were going to say that? Silver spent the month basically around or below $14, finished at $13.88. The real story for the year in precious metals was the platinum group metals. Platinum down 26% over the year. It approached its 7-year low, and let's go back 7 years. That would be in the heart of the global economic crisis. It hit a low of 829 in December before rallying over the last week or so to 890. And the real story is palladium down almost 30% over the year, finished the year at 563. The opportunity, I think, to acquire some platinum and/or palladium is now. I'm not saying they can't go lower, but I like these prices. I like the ratios with respect to gold. The platinum to gold ratio got as low as 0.778 in early December. Rallied a bit, finished the month at 0.84. But if you look at our chart, we're dealing with historic lows for these ratios right now. And, if I was going to buy precious metals anytime soon, and I may pick away, probably go buy a couple of bars of platinum.
Yeah, platinum is it. But what does platinum and palladium prices, the fact that they are crashing almost, what does that say about the auto industry, which is the biggest consumer of those metals?
Well, it's quite interesting because auto demand is not off. Auto demand in China and U.S. is very strong. What it does say with respect to palladium, that is, palladium is really all about gasoline, burning automobiles. The reason that has been what I considered oversold is unclear, with demand for autos remaining very strong. Platinum, I think, really has gotten hurt by the story of Volkswagen and how endemic that scam may be with other diesel-producing vehicles or diesel-burning vehicles. Because when you get into platinum, that is still the major component of catalytic converters for diesel motors.
Absolutely.
So, and there's rumors out there, and of course that leads to speculators coming in and shorting the market. But that this trying to fake out the emissions testers by with false readings from computers on emissions could be a lot more than Volkswagen. Surely has not helped Volkswagen. Surely has not helped the platinum market.
Yeah, that's for sure. And we haven't seen the last of it for sure. The scandal.
And also with respect to especially platinum, most of platinum comes from South Africa. In the world, something about 70-75%, and the rand has been very weak. So that means that platinum producers in South Africa, because they sell the metal in U.S. dollars and their costs are for the most part in rand, that means that their operating costs have gone down.
Yeah, that's true. And in a lot of the mining that you see, operating costs are down across the board because they're so energy intensive, and the profits
and weak local currency.
Yeah,
too.
and I was just about to say that. Yeah, so you should see mining profits go up substantially the next quarter or two for sure. You would think.
Well,
the miners,
maybe depends on what commodity prices.
Yeah,
do.
well, if they've locked them in.
I have a fairly negative short-term view of most commodities markets, with the exception of the metal we're going to talk about next, and that's copper, which ended the month at 212, down a whopping 26% over the year. At $2.12 a pound, there's a lot of producers in the world that are losing money.
Underwater.
And we are seeing production shut down. It is the one commodity which I think there has been a very much overreaction to the slowing down of demand from China. Copper demand growth remains strong worldwide. I have not looked at the numbers for 2015. They'll be out here very soon from the International Copper Study Group, but I very much expect copper demand to increase worldwide somewhere north of 3% once again this year. We see this year after year after year. Supply got a little bit ahead of demand in the copper business, but with production coming off, I look for a rebound of copper in the short term and certainly within the next year, because I just do not think that there's enough copper production at $2.12 that will remain online to keep that supply-demand balance, which we are so used to in the copper market.
Absolutely. And it also, cutting copper production has an effect on gold and silver production as well, because so
True.
much of that is byproduct.
Yeah, and there's no doubt that we will have reached a peak in gold production worldwide sometime in 2014 or 2015. Haven't gotten the 2015 numbers, but 2014 was a record year for gold production. And no doubt that's going to go down, because with this lower gold price, companies are not replacing reserves, and exploration companies are not doing the necessary work to bring on the next pipeline of gold projects. So we're going to see probably a 5-year or so decline in gold production, perhaps into around 2020. And that assumes that the gold mining industry gets its house in order.
Okay. So let's look at the really scary markets, and in that I'm referring to energy. I mean, they're just decimated for the year. Prices are down so low that talk about marginal producers shutting in wells happening all over the place. Rig counts are down. I mean, just look at the carnage here.
Yeah, but Kerry, the only thing that is not down is production.
Right?
Yeah. So let's briefly talk about the price falls this year, and then go into some of the reasons that this has happened. WTI finished the year at 36.60, down 31% over the year. The most amazing thing over the last month, that Brent is now, as of yesterday, closed the year below WTI, down 36% over the year. This arbitrage that we've looked at since we started this monthly review in January 4 years ago is we've never seen this. No arbitrage between those two oils. That just tells you that there is an oil glut worldwide. No one's blinking. The Russian ruble, because of this, hit a 2-year low yesterday. Henry Hub gas has been flat. It lost 26% over the year, but flat over the last month. And that has to do a lot with a mild winter. I talked to the guy doing another regular radio show. He's based out of Toronto. The grass is still green in Toronto on New Year's Eve. When's the last time they've seen that?
Same in New York.
Yeah, mild winter.
The biggest consumer of nat gas is U.S. Northeast in winter.
Absolutely.
And they're, and it's so funny because 2 years ago, these power plants were paying $60 to $80 per million BTU peak spot prices to keep the electric going because the winter was so cold. And now here we are, it's 70 degrees, 55 degrees in New York, New Year's Eve. It's insane.
Yeah. So, here's the deal. Over the last year in the world, 2.3 million barrels of oil higher production per day. 2.3 million barrels per day. We expected declines in the U.S. shale oil. That's essentially has not happened, off a bit, but the projections in 2016, 2017 is same production in the U.S., approximately the same in Russia. Here's a list of countries over the last year that increased production. Usual suspects in OPEC: Venezuela, Nigeria, Iran. Also, Mexico increased production despite the fact they're running out of oil. China, Canada, Brazil, and Norway all added production in 2015. Now we have Iran, and that's a wild card, but with Obama's declaration that he's solved the problems with Iran in an agreement which has no teeth and will not be approved by Congress. That's another wild card that could produce up to 1 million barrels of oil per day by the end of the year. We got 1.2 billion barrels of oil in inventory worldwide, running out of spaces to put it.
Yeah, tankers, running out of holes in the ground.
Yeah, holes in the ground and tankers sitting offshore loaded with oil. About all I can say about the whole thing, Kerry, is peak oil. I am LOL. I mean, think about it. I have never been a proponent of peak oil. A couple of years ago, it was all doom and gloom peak oil. And
we talked about it.
It's just pseudoscience, and it will always be pseudoscience. We've got 300 million years of Earth history when we made oil, and it just depends on the economics of getting it out of the ground. We've seen this over the last couple of years. But there are some analysts that expect this kind of to even out by the end of 2016, but who's going to blink? Saudis haven't blinked. OPEC, all these banana republics, and I say that meaning that their entire revenues are based on oil business. Venezuela, Mexico, Nigeria, Syria, the list kind of goes, Algeria, Libya, goes on and on and on. Who's going to blink? The problem is that none of these countries, they've all increased their social services and their government obligations to the people. They are generally not the most stable places in the world, and all they can do is increase production to try to get some revenues to pay the bills. And so who's going to blink? Well, the U.S. is not going to blink because it's all private industry. As long as people can continue to make a little bit of net back, it's better to keep the wells producing than shutting them in because there are costs associated with that and the startup. So I don't really see the end in sight for low oil prices.
Here's the demand. Okay, worldwide demand, 94.6 million barrels per day. Now, the peak oil guys, when it hit 80, said we've reached the world's maximum constraints on petroleum production. We can't go over 80 million barrels a day. I think that was 6-7 years ago. Here we are. We're still in the Great Recession, whatever you want to call it.
Yeah.
I mean, it's irrelevant what you call it. It is what it is. But consumption is still going up. Electric cars, my butt, windmills, solar cells. The world runs on petroleum. It's going to, I believe, for the next 20 years, but eventually alternatives will start making a meaningful dent. But that time is not now. So point here is that production number, when you look at the inventory, Mickey, You said 1.2 billion barrels. That's really only 12 days of world consumption. That's not really that much.
Yep. And same with the copper market. We haven't talked about copper inventories, but worldwide inventories of copper are certainly less than 10 days of daily demand. So, yeah, the real demand growth is by the number of people. We're adding 220,000 people per day to the world's population. That's 85 million people annually. And every one of those persons now, for the most part, is connected worldwide, and they want energy, they want metals, and so we expect the growth and demand of basic commodities, oil, copper, iron ore, to increase concomitantly. It always has. So, and it's hard to be bearish on commodities, metals or energy in the midterm. This is, in my opinion, a short-term perturbation in a long-term secular bull market.
Yeah, I agree. And yeah, it's just interesting that everyone's so short-sighted. You think that whatever is happening today is just going to keep happening until it doesn't. And the way you make money in life, not necessarily in the markets, but in life, is to see the trend and to know, like the Bible says, in times of war, prepare for peace. In times of peace, prepare for war. And to me, that's what markets are about. That's what business is about. When things are really good, you need to be putting money away. You need to be bolstering your reserves, because eventually things aren't going to be so great, and vice versa. So make your investments when markets aren't good, not when they're
for every time turn, there is a season turn.
and every dog has its day, right?
Yep.
And that's the beauty of markets. So learn from your past mistakes and think ahead. Don't think with the crowd, because then you're guaranteed to lose money when you follow the crowd. Mickey, who in their right mind thought that oil was going down this much, this fast this year?
What did I say at the end of last year? I'm sure I said that by the end of 2015, I expected oil to be back in that $60 to $70 range, where everybody could make money.
Me too.
Was I wrong about that?
Yeah, you're off a little, but that's because you can't predict markets as far as timing goes.
All you can predict is that the current paradigm is going to change, and you anticipate which way it's going to go, and you make contrarian investments or contrarian speculations. You've got to buck the consensus opinion. Don't be a sheeple. Go against the herd. You'll win some and you'll lose some. But if you're patient as a contrarian and you pick good companies, good equities that are built for the long term, eventually, if you have patience, you will succeed, because the times are always changing.
Absolutely. Patience. Don't take too much risk. Don't lever up, because you don't know when, it looked like the TSXV there, the venture, hit its bottom and last year, but here we are this year. It went down even more. In any event, enough platitudes advice. I think it's important that you really go over all these markets, really see where they've gone. If you want, we can send you a spreadsheet on them. Just send me an email, kl@kerrylutz.com, and then you can take a look, see what we use. And Mickey, we would be very happy for anybody that wants to know how we track these things. That's a great idea, Kerry. We never talked about this before, but be very happy to send you our spreadsheets, and you can kind of in a one-off, and you can continue to track, or at least you'll get an idea of what we do. Yeah, and I mean, we could actually, if you really want, we could set up a subscription list, and all of you who listen to the monthly report, before we do the report, we can send it out, or we can send it out with the audio on the report. It's easy enough to do, and then you'll be able to follow along with the numbers. Might be a really useful tool. So,
and probably people can pick out the fat thumb mistakes we make on occasions.
Well, we don't want them to do that.
For instance, today we had the formula for copper got screwed up, and so I caught that after I printed it out before we did the interview.
Well, nobody's perfect here, but for the price they're paying, they're getting more than fair value.
can't beat the price.
So yeah, send us emails.
We're not going to pay anybody to read or listen, but
no.
So I guess you could beat it. You could make money at it, but but it's a break-even proposition.
Yeah, just a value thing for you, so you can follow along with the analysis, understand where the markets have been and where they're going. History is very important. Not so much as a predictor of the future, although it certainly can be, Mickey. You and I would both agree on that. But as a sense of giving you perspective, and you know that when you see something like oil that went up to $140 a barrel at one time, now it's trading at around $37 a barrel. It could very well go up at some point in the future to where it was in the past. As far as when, history is not good to tell you that, but as far as telling you that it could exceed its prior peak, we know that happens all the time. So I like historical numbers because it gives me a sense of where we've been, where we are, and where we could go.
Well, yeah, we didn't talk about uranium. Let's finish up here.
Yes,
I forgot about uranium, but your little diatribe about oil right now reminds me that at one time the uranium price spiked to $135 a pound. Mm-hmm. It is now at $34.38. So very similar to the rise and fall of oil over the last 8 years or something like that.
Yep.
Uranium's about an 8-year period. I guess oil's about a 7-year period. But when you have derivatives and when hedge funds, when speculators get involved, it makes for bubble markets. It makes for parabolic markets, and on both sides. So we've seen a downturn in commodities. We don't know how low it will go, but I guarantee you it will go to a bottom and it will spike up, and we'll be done with a bear market at some point.
Yep, that we know. The history teaches us that all booms end in a bust, and all busts end with a boom. And this will be no different. Anyway, Mickey, hey, best of health, happiness, luck to you the coming year. Best of health and happiness to all of you out there for the coming year. Thank you for listening. And Mickey, hey, we'll keep plugging away, and we'll keep watching and reporting every month without fail.
Without fail, Kerry. Absolutely. Good to talk to you once again. Happy New Year.
Thank you so much. And till next month, hey, just take a look at Mickey's site, mercenarygeologist.com, Twitter feed and all of that. Mickey, what else we have to follow you on?
Well, at Mercenary Geo's Twitter feed, we're at 52,000 followers, and the interview will be posted on mercenarygeologist.fm.
Excellent. And financialsurvivalnetwork.com. We've got big changes coming to the site this coming year. If I can ever find a reliable programmer who doesn't bug out in the middle of the project, it's such a pain, Mickey. You can't believe it. But financialsurvivalnetwork.com. Tens of thousands of you look at it every month, so it can't be that bad, but I want it to be even better. And Mickey, we'll talk to you in February. Be well.
Thanks a lot, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.